Welcome back to the channel. Today we're taking a closer look at a really surprising move in the Zcash, one that goes against what most technical setups normally predict. The market just ignored a major bearish signal and is now pushing upward with momentum that wasn't expected at all. The market delivered an unexpected move over the past 24 hours, and it's worth breaking down carefully because it goes directly against what probability and technical structure normally predict. After closing below the 0.382 Fibonacci level, the expected and historically consistent outcome should have been continuation toward the downside with a high degree of certainty, especially since that close produced what looked like a proper bearish engulfing candle. Yet, instead of selling off, Zcash has reversed aggressively and is currently on track to bullishly engulf the previous day's candle. With several hours left in the daily session, the reversal appears strong enough to invalidate the immediate bearish scenario, and that shift alone forces us to reevaluate the near-term direction of the market. When something happens that is statistically improbable, it often signals that price wants to push the other way with more strength than expected. Right now, that suggests a move toward the next major zone. The golden ratio between roughly 524 and 560 is. This does not confirm that the long-term bottom is in, nor does it erase the possibility of deeper downside later, but it does indicate that upward continuation is the path of least resistance in the short term. Looking closer at the 1-hour time frame, the structure supports this move despite some intraday turbulence. The initial spike looks slightly mechanical, almost like a manufactured reaction, but regardless of interpretation, the structure is intact and still leaning bullish. Multiple hourly candles have closed above recent resistance levels, which usually sets the stage for continuation unless a strong rejection forms. The RSI pulled back after brushing the overbought zone, but it did so without damaging the overall trend. The earlier bearish divergence did cool momentum, but it didn't break anything structurally. Stochastics and MACD are both elevated, but not in positions that necessarily end the move. They look more like they're resetting for potential continuation rather than rolling over into a full correction. All of this keeps the 1-hour chart in a condition where further upside remains more likely than not. The real tension, however, sits on the 4-hour chart, which is in a fragile state and will determine whether this move sustains or fizzles out. With only a few hours left in the current 4-hour candle, the closing level matters significantly. If this candle closes below $433, that would shift momentum back toward the bearish side. The 4-hour RSI is close to rejecting the overbought zone, and if we close red, we confirm that rejection, which would cause the stochastics to turn downward and likely produce a bearish flip on the MACD histogram. When all three major indicators align bearishly on a 4-hour chart, that usually leads to renewed downside pressure. On the other hand, if the candle closes green or even neutral, but above the critical $33 level, the bullish scenario remains valid, and the push toward the 524 to 560 zone stays alive. Right now, we are in a middle area where the move is real, but the structure needs confirmation from the 4-hour close to avoid invalidation. This video is created for informational and educational purposes only. Nothing discussed here should be treated as financial, trading, or investment advice. Always do your own research, make your own decisions, and be aware of the risks involved in the market. I'm simply sharing analysis and observations based on the plus. Because of this mixture of strong short-term momentum and vulnerable mid-term structure, the outlook at the moment is what I'd call cautiously bullish. The chart is giving upward signals, but there are still warning signs underneath that require attention. The target range between 525 and 560 is the next major test where resistance is expected to be heavy. This zone aligns with the golden Fibonacci ratio and with previous areas of support that have since turned into resistance. If price reaches that region, it will be extremely important to watch whether we get a hard rejection or a clean breakthrough. A rejection there could easily create a lower high and send price back toward the recent lows. A breakout above that zone, followed by support forming on top of it, would dramatically change the larger trend. The key levels to watch cannot be overstated. If any 4-hour candle closes below $434, the bullish momentum weakens immediately, and the risk of revisiting lower support zones grows sharply. But even more important is the $372 level. As long as Zcash stays above it on a closing basis, the lows can still hold. Wicks below it are fine. But a full 4-hour or daily close beneath 372 would strongly increase the probability of breaking the entire structure and printing new lows. That level is effectively the line in the sand for the medium-term trend. As for the bigger picture, we are still in a phase of structural uncertainty. It is completely possible that the recent low is a true cycle bottom. It fits structurally and doesn't violate any rules. But my larger expectation has still been that Zcash eventually travels below $200 before forming a long-term bottom. That projection does not get invalidated just because we move into the 525-560 region. In fact, even if we rally into that zone and then roll over, that would likely form a standard lower high that still fits the larger bearish expectation. The bullish reversal we're seeing today only becomes a true long-term shift if we push through the golden ratio zone, break above it, hold it as support, and then begin moving toward the larger targets, which would include 943, 1300s, and potentially higher over time. That scenario is possible, but it requires a clean sequence of bullish confirmations, none of which have happened yet. So everything now comes down to the next several candles. Do we close the 4-hour candle above 433 or below? Do we carry momentum into the golden ratio resistance zone, or do we stall and retrace? Do we maintain the unexpected strength we're seeing right now, or does the move fade just as quickly as it appeared? This is a genuine turning point, and the market has not yet committed to a direction. At the moment, the upward path remains the default expectation simply because the market refused to follow the bearish probability setup, which usually signals upward continuation. But the bigger trend and the question of whether a macro bottom is in remains undecided. Thanks for watching. If you found this breakdown helpful, make sure to hit the like button and subscribe so you don't miss the next update. I'll keep covering the